Jobs are changing. Yes, jobs are changing. Yes, property markets are changing. And now, even the way you send money from America to India is changing. In our next story, I will explain a new US remittance rule that every NRI should understand before making their next international transfer. If you live in the US, chances are that you send money back home. Well, it could be for your parents, your children's education, a home loan, investment, or simply to support your family. For millions of Indians, sending money from the US to India, it is a normal part of life. But now, America has introduced a new rule that every NRI should understand. At first glance, it looks like a small tax change. But experts say that the biggest story, it is not the tax itself. The biggest story is that the US government is building a much stronger system to track international money transfer. Ladies and gentlemen, from January 1st, the US introduced a 1% remittance tax on certain international money transfer, right? But here's an important detail. The tax does not apply to every transfer. If you walk into a bank or money transfer center with cash, a money order, or maybe a cashier's check, you may have to pay the additional 1% charge. However, if you transfer money digitally through your bank accounts, online banking, ACH payments, or a verified debit or credit card, this extra tax does not apply. So wait, does that mean digital transfer are completely safe and there's nothing to worry about? Not exactly. Experts say that governments want more and more people to use digital payments because electronic transfers leave the complete financial record. Every transfer creates a digital trail. Every transaction becomes easier to monitor, and every large moment of money can be compared with your tax record. Wait, let's understand this with a very simple example here. Suppose somebody reports an annual income of about $40,000 to the IRS. But during the same year, that person sends about $50,000 overseas. Naturally, the system may ask a simple question: where did the extra money come from? Well, that does not automatically mean that somebody has done something wrong here, but it does increase the chances of additional scrutiny because the IRS now compares international transfers with tax return and financial disclosure much more effectively than before. This is specifically important for Indians who are working in the US on an H-1B visa, green card holders, and high-income professionals. Many people transfer money for property purchases, family expenses, or investment in India. Going forward, experts advise that every major transfer should match your declared income and proper financial record. So let me tell you what should you do here. The active advice, it is quite simple. Where possible, avoid cash-based transfer. Use official digital banking channel, maintain proper financial record, and make sure that large international transfers are supported by your tax document and legal financial history. Because today, moving money internationally, it is no longer just about finding the lowest transfer fee. It is also about maintaining complete financial transparency. Well, the US is moving towards a more digital financial system where almost every international transaction can be verified electronically. Well, for honest taxpayers, this should not be a problem, but understanding the rule before sending money can help you avoid unnecessary questions later on.